What to do about unsuitable loans. Hello again, I'm Martin North, the Principal Analyst at Digital Finance Analytics. I was asked by one of my followers about the implications of loans that may be classed now as unsuitable based on the recent Royal Commission findings. Now, I'm not today going to give financial advice. I'm just going to talk generally about my own views, which may or may not be correct. So unsuitable loans are those that essentially do not meet the standard criteria that have been laid down by ASIC. And they are that as part of a loan mortgage application process, the individual loan application's personal circumstances should be considered, and particularly looking at whether they can afford the loan, whether it meets their need, and the other parameters around the loan application. And you can't really outsource this to a mortgage broker, nor can you just use things like HEM without appropriate tailoring to the individual circumstance. So you'll hear a lot about scalability. In other words, what you should be doing is taking account of the size of the loan and the individual as to the amount of investigations that you do to prove that the loan is suitable. Now, all of that has to be documented so that subsequently the lender can demonstrate that that loan was suitable at the time it was offered. So, if it is true that we have a considerable number of households who are sitting on loans that do not fall within those suitability criteria, the question is, what happens? Well, there is very little case law at the moment, so it's hard to know in detail how this would play out. But the assumption that I would make is that if a loan is now deemed to be not suitable, that leaves open then the borrower's path to be able to go to the lender and seek at least to renegotiate the loan, or indeed to be put back in the situation that they were in prior to taking out the loan. Now, you can imagine that if you had quite a few households in a similar situation, they could even perhaps club together and then take a class action back to that particular lender seeking redress. Because if the lender has effectively not worked within the rules, those loans are potentially invalid. The property would have to be sold and the mortgage repaid, but any shortfall potentially would actually be down to the bank. Or indeed, it could well be that that loan would need to be restructured such that it was more affordable for the particular borrower. I think we're going to hear a lot about serviceability and specifically about not unsuitable loans in the months ahead as the Royal Commission reports. But even now, I've received a number of comments from individual borrowers indicating perhaps that they think that their loans are now unsuitable. And I guess it's true to say that in a market where home prices are beginning to slide and where incomes are flat, it could well be that more households will start to claim that those loans were not suitable even when they were made. Now, the other interesting question here is, does suitability vary based on bank practice or the broader economic situation? Now, neither of those factors have been tested at law so far, but it seems to me quite likely that it will be argued that the loan was suitable at the time it was made based on all the available information at the time, and that the future potential trajectory of the economy or wages was unknowable. However, it seems to me that suitability has to include sufficient buffers around, for example, potential interest rate rises and cash flows and other household finances. So I'm not sure how that argument will run. So if you are an individual with a loan that you feel is not suitable, it may be worth thinking about the steps you could take. And this is not financial advice, so you need to take independent advice from somebody who is qualified officially to give you advice. So it may be worth thinking about approaching your bank directly, or you may even want to go and talk to the banking ombudsman to see what they can do to assist. If you found this useful, please do like the post and add a comment or question. I do read them all. And if you've already subscribed, thank you. I'm really grateful for your support. And if you are yet to subscribe, please do so to receive future alerts. I'm Martin North, Principal at Digital Finance Analytics. Many thanks for taking the time to watch.